Good morning, SMF MMTs. We've already had a lengthy discussion at 6:10 a.m. Pacific Standard Time. That's 20 pennies to the opening bell. What are we gathered here to do today is we're going to use the SMF platform and everything that it represents and all the conversations that we had prior to the open. What it will do is that yesterday's delta down move and the negative ratio is to be able to take today's price action and the delta up in the brain, whatever it may be, if it's a quarter, half, whatever, we will be able to digest the actual state of the strength, the immune system of the move in the price action within all indexes and ETFs and bears and bulls. Focusing on the TQQQ, the bull got itself whacked. We're long overdue for a correction, as we've said. We are market makers, so the news doesn't really mean anything to us. What means everything to us, MMTs, is what the pre-market is valuable for, is refereeing the public psychology and what the bigger, broader community group of people who engage in exchange model transactions. There are people who make markets in these markets, so making a market between the buyer and the seller is our key focus, always. And the SMF platform is a market maker platform. What it does is it prices right down to the bid and ask in the level 2, which is a market maker bid and ask. He's a buyer and a seller on both sides of the market. Then people are interacting in there in the middle. There's all kinds of things going on. So today on the opening bell, like yesterday in pre-market, as I said, was that left elbow. SMF is famous for that left elbow price action. What happened was on the opening bell, everybody came in and wanted to short the bottom of the move. How dumb. That's how you get those 3, 6, 9, 12, 15 or those $4.50 to $6 moves off the bottom now. And that's what making a market's about, and that's understanding the mechanics of it all and whatnot and how it happens, and it happens very quickly. However, when making that wonderful transaction, it's the greatest thing because you're doing it without uncertainty. You have a system that tells you, it gives you the comfort, gives you the psychological aspects of the human buy and sell transaction within the public tape, because it does. And you're making a market when they're not there. You're selling short down in the ratios in your platform, and hey, and when they're there and they want to keep going, and if they're strong, well, you know that they're there, and you get in the move and you let them take it higher for you in those cases. So by understanding how it works in both the top side of a short or a bottom up in your platform, you know how it works. But here's the gap down list. Netflix, so you can see the gap down list right here on the Nasdaq. Now on the other hand, on the gap open list for selling short, here, let's get this in the right way. I'm sorry, for some reason we'll have to have Brian Plain come in here. Sort ascending, see if that works. I think that's what it was on, so let's go descending in this case. Now here you have NDSN, $14. Veritox Pharmaceutical, hey, that's in that biotech. And let us not forget about that human genome coming on up on March 10th of year 2011, what it's been listed. Listen, price line up 272. So these are the counter gaps in the high beta ones that we make markets to. The trick for you now, MMT, is as follows. Is if we gap and that ratio is of the high and the ratio starts to decelerate, going down, diminishing slightly, say 5 ticks down, is that you don't break above the high and close above the high of that ratio in that 3-minute, 6-minute, 9-minute, 12-minute, 15-minute price action bar. Hey, stay short. Because the thing about it is, it's all about shorting that ratio high. What you're looking for is the counter move to some of yesterday's selling in the big names. And it's all going to be about the delta expansion, everything that we talked about prior to doing this video for you. So this is the part that I want you to see as far as the bull goes, he's got a 1.06 ratio gap, not much, not like the gap down. Apple, on the other hand, and remember that the upside move, how do you know it's a diminishing 369 sell at the top there at that price action teeny line? Is because the ratio won't go higher and it'll start to turn, and so will the IR. The bid and ask ratio is what pegs our bid and ask ratio, because your platform does all of it and a whole lot more, and you guys already know that. So basically it's where they turn right away, that the up move is the delta contraction on reversal is not as high as it should be. That means that the overall moves are weak, and that you're going to stay below 35 all day. Roll up, you hit zero, you kind of gradually, if you're not pounding from 0 to 25, that's what you want to see on that left elbow gap down in your platform. Yeah, and then all of a sudden, bam, it goes and it keeps going, and so does a bid and ask ratio, and you let the price run. As long as that's running, you let everything else do its thing. When it stops, hey, it's time to sell, but make sure your other MMT knows. So basically, we're looking for delta contraction to yesterday's selling and what that number is going to be throughout the actual trading day. So there's the bull gap, and as I said yesterday, everything has a mathematical reversal. There was no continuation on the opening bell down. This is your gap list right here. So when we take a look at the overall delta expansion or contraction, you're going to have a much higher delta today than you have seen all year. Okay, the gap open up on the NYSE is important. DEP, HLF, COG, these are all opportunities that you can look at on that ratio gap. So when it fails in the IR and starts to go weak, you can always take them for a short sell for a 369 down, and depending on your teeny range is what you're going to get. 3 teenies down. If it breaks it, maybe you go to 5 teenies. Okay, so you can look at here, this is it. So you got a lot of green in the NYSE. That's where a lot of program trading occurs, on the NYSE. That's program trading that is done electronically. And probably on the NYSE, I would say over 50% of that volume is electronic program trading. On the gap open down MMTs, looks like we have, now which way should this be? Let's take a look and see what the relationships are here. Looks like we got Hewlett Packard, your tech stock, down 4.43. High flyer FLR down negative ratio. These are all the things you're going to look at that left elbow. These are the names right here on the NYSE. And basically understand your teeny range in your platform, in your SMF market maker platform. And just remember, if it's 25 cents a teeny and you get 3 teenies up at 75 pennies, 500 shares for you, still a positive debit of $350 some odd dollars. Nothing wrong with that, considering what the private sector earns. Look, gap open down, these are left elbows, okay? And we already know what the gap open list is, so we know what is happening. The gap open list is right here. But the gap open list isn't a bull market, it's just a selected few names. Oil's high today. Remember that we're still overbought in the markets, and we were having a correction. What you're refereeing now is the brain, the delta contraction in the brain from yesterday's big selling. Let's rumble.